Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is May 8, 2023. I'm going to take a quick look at the dollar versus yen. There are two charts that are in play for the dollar versus yen. One is the hourly chart, so let's start with that. And as you can see, the high price here today is stalling against the moving averages. The 100 is the blue line, 100-hour moving average is the blue line. The 200-hour moving average is the green line, and the high price just came up to test that 200-hour moving average at 135.20, and we're currently trading at 135.08, just below the 135.08, well, right at the 135.08 100-hour moving average. So the price moves higher, trying to find sellers against that level. If the price can stay below that those moving averages, the bias in the short term remains a little bit more to the downside, and we look for further selling if that momentum can continue down toward our low prices from Friday's trade right through here and in trading here today, which comes a little bit below the 134.69.9 level there, so probably around 64 or something like that. So that's what we look for. If we move above those moving averages, then we look toward the 135.36 level, which is the high of this yellow area. Now, where does this yellow area come from? In order to fully understand that, you have to go to the 4-hour chart. And if you go back to the 4-hour chart, there's a couple things that are in play here today from a technical perspective, which makes it even more interesting for us as traders. One is this the yellow area where we had a ceiling here developed here, and then we broke above that ceiling and came down and used it as a floor right through here. Then we broke below it and used it as a ceiling again right through here and even back in April. So this goes all the way back to the month of February, and we tested in April, and then in trading at the end of April, the market moved above that level and forced its way further to the upside. And then in the beginning of May, we came down. This is last week's trading. We came down and tried to hold support against that level and then broke below it and moved to the downside. And on Friday's trade, what do? We found sellers against the low of that swing area near the 135.08 level. And in trading here today, we are seeing sellers within that area. So the 135.36 level needs to be broken on the top side to increase the bullish bias, get above the swing area right through here, and opens the door for further upside from a technical perspective. If we stay below it and move below it, then even this 100-bar moving average on the 4-hour chart becomes a point of interest. Why? Because we held it on Friday's dip right here, and we held it in trading here today. That currently comes in at 134.648. So we need to get below that level on the downside in order to push further toward probably the 50% retracement. That's this level right here, 134.17. So testing the 100 and 200-hour moving average on the top side currently. That's these two moving averages. Get above the 135.36 level, more bullish. On the downside, on the 4-hour chart, move below the 100-bar moving average right here at the 134.648 level, increases the bearish bias. So the battle is on between buyers and sellers in the dollar versus yen. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.